Got a simple video for you guys today. $22,000 this week so far, and then a couple other setups we're looking at. We're going to go over 4 setups today. 2 of them are trades that have been closed this week in profit, and the other 2 are potential setups that I'm looking to maybe take within the next couple days, perhaps even going into next week. So let's jump right into it here. Let's start with the first trade that hit TP this week. This was a GBP USD trade. This was last week. I adjusted my target a little bit lower, but why did I take this trade? Let's go ahead and just keep it real simple here, because it really just boils down to a couple simple things. There was this support resistance zone right here. This is the daily chart. You can do support resistance on lower time frames, like you can use 1 hour, you can use 5 minute, 1 minute. I just find that from my experience, it seems to work better on higher time frames. So 90% of my trading career, I've been a swing trader. I've scalped intermittently at various times, but they tend to work really well on higher time frames in my experience. So the daily chart, I just find the really obvious areas where price is kind of bounced around at. Price looks like it's bounced here as support, bounced a second time, broke below, retested as resistance, and then last week we had come back and hit this area right here. So the last week or the week before, whatever. So price came up, hit this area, and then started to bounce again. So what I did is I just thought it was going to be falling away from the resistance zone. So as crazy as it may sound, I sold at the resistance zone. I had a stop loss above, and then I had a target essentially right here where the wick went into. I got kind of lucky that the take profit filled right there because it was literally to the exact pip, and it just so happens to be that way sometimes. So this is what it looked like. I'd sold right here at the resistance. It went down. I risked $10,000 on this trade, and this trade ended up netting me $14,000. So this isn't when I hit the profit target. It actually hit the profit target on Sunday when the market opened. It just happened to gap lower. You can't predict things like that. It could have gapped upwards back and been at break even on the entry, right? But it just so happened to gap down lower, filling the profit target and kind of completing the move that I thought it would do. So this was a $14,000 profit. So now we come into the next trade I took this week, which was GBP CAD. So this is what the trade looked like. Let's go ahead and look at why I took the trade. Again, the same sort of simple analysis. Price came to what I would consider to be a major clear resistance zone. Again, we're on the daily chart. Price had bounced a couple times in this area, tried to get above it, failed, came back below, then tested there as resistance and fell. And then lo and behold, we come up here again this week. Price gets here into this resistance zone. So I sold essentially when price got into the zone. I sold with the idea that, if it's going to bounce there, it's probably going to bounce right there. If it goes a little bit past it and then bounces, that's fine. So I had my stop loss high enough to where it wouldn't trigger me out unless price actually really broke above the zone and then above the recent extreme high. And then I just had my profit target set at a 1-to-1 risk reward ratio. I won't always do that. Sometimes I'll close a little bit earlier before the profit target, and sometimes I'll hold longer like I did on GBP USD. That was originally a 10K profit target, but I actually adjusted the target a little bit down. So it's very dynamic. Whenever you're entering trades and then choosing your management and what's the best way to manage the trade, you're free to do whatever the hell you want, right? And a lot of this just comes with experience. There's no perfect way to do it. There's no exact way to do it. There's no specific step-by-step thing you can do to always do the same thing every time. It really just depends on the context. So for this specific trade on GBP CAD, I just elected to have a 1-to-1 risk reward ratio. You can see right here, here was the entry. This is a $10,000 risk. This is my actual trading terminal on MetaTrader 5. I'm with Forex.com, the broker. It's not a recommendation, but that's the broker I'm using. And 7.5 lots, and then it came down here. So you could see that, I think it was later that day or the next day, it came down. It almost hit the profit target, but it did not fill the profit target due to spread. So what I ended up doing is actually elected to just close it right there, right before the profit target. This was an $8,600 profit, so it would have been like a 10K profit had it gone. It did end up going lower into the actual profit target, and then now I've woken up this morning and now we've seen this huge spike down right here. Or this would have been maybe like $20,000 of profit. However, and I'm happy with my decision. You'll never be able to predict how far price will go. So that was that. Anyway, so this was, that was the GBP CAD trade. There's been no other trades this week. However, there's a couple that I'm looking at, and I actually share these in my free Telegram channel. This channel has about 61,000 members right now. I've been running this free Telegram channel for like the past, it's been like 7 years now, since the summer of 2018. So we're coming up on almost 7 years. You can join this free Telegram channel at the first link in the description. I actually just share my analysis every single day for trades just like this. I show what I'm looking for during the week, and then like I give little hints about what I'm entering, and then I call all my exact trades in my Discord. But the Telegram channel is completely free, and I just share all my analysis and stuff right here. I'll show. This is the trading week, so here's the trades: GBP USD, and then of course the GBP CAD trade. It's been a little over $22,000 this week after swaps and commissions, so that's been pretty good. There's also been I put somewhere in here. I put like a screen recording of it, but I don't know where it's at. Anyway, this free Telegram channel, this is where I share all my analysis, so you can actually follow this live in real time, or you could just keep watching these YouTube videos. Either way, I'll share the analysis. So let's go ahead and actually have a look at what I'm looking for this week. I've shared all this in Telegram, but it's very simple. I'm going to share it all right now. So first one I'm looking at is Euro AUD. So originally, earlier this week, I was thinking that price would come down here and then come back up to retest, and I was going to sell here at this resistance zone, right? I was going to sell with just a stop loss above target, probably at a 1-to-1 or maybe a little bit lower into the previous zone. This didn't happen, right? It didn't set up for me. If you go to the lower time frames, like the 1 hour, you can actually see that it had already technically set up, right? And it went up here. By the time I found this setup, price had already pulled away from the zone because this happened overnight. So I was looking at it when it was like down in here, but that's not the best entry, because if you enter there and your stop still has to go above the zone because it's still valid unless it breaks above. If it comes down here, it just makes the profit target bigger. You have more potential for loss. You have a shittier entry, and it just makes things more of a pain in the butt. So I was just waiting for it to come back up into this resistance zone. That didn't happen. It actually just kept on continuing away from the zone, playing out exactly as I thought. Why did I think it would go down? Well, price bounces around support resistance zones. You could see it bounced up here, broke below, tested as resistance a bunch of times, fell, broke above, came back, tested this resistance zone as support right here, and then bounced right there upwards, right? So, broke above, came back and tested. The fact that it came back and started going sideways, then it broke below the zone, then came back up and tested and found resistance. What that tells me is that there's no longer enough buyers here at the zone. It broke below the zone, and then it's just come back. And, the idea is that maybe it'll bounce. I don't know, right? If you could just get it right a little more than half the time, you have a profitable trading approach. Even if you don't get it right more than half the time, right? If you just randomly enter buys and sells at support resistance zones with 1-to-1 risk reward ratios, after enough trades, you're roughly going to break even, right? Because price just goes up or down. You add a little bit of your experience and intuition and discretion to that, then you're able to start kind of getting it right, maybe a little bit more than half the time, 60% of the time, 70% of the time. If you have a 60% win rate and you take 10 trades, you win 6 of them and lose 4 of them on average after enough trades, then what that means is you're coming out on top about 2 units of profit for every 10 trades you take, right? You make 6 units of profit, subtract the 4 units of loss, you're left with 2 units of profit. If you're risking 10K per trade, that's like 20 grand, right? It's a lot of money. If you get a win rate higher than that, which is like 70 or 80%, right? You're just really waiting for the kind of trading opportunities that you think are very likely to result in a profit. Then it's even crazier. Imagine taking 10 trades and winning like 8 and only losing 2. Now you're up 6 units of profit. At a $10,000 risk per trade, that's $60,000. It's very, very scalable. And the best part about this is if you just use 1-to-1 and just enter randomly, right? Given enough trades, you're just going to break even. So if you're doing this with very small risk on a tiny live account, or my personal favorite, just use a demo account for a long time and just get enough experience, you're roughly just going to break even. So trading this way, you actually start with a break even system. And then I'm not just saying that. I mean, think it through for yourself. Like if you just enter randomly and price just goes up or goes down, right? There's an equal probability, if you have zero experience on how to trade, that if you're just trading with the same risk per trade, say like $10 risk per trade, and then you just have a 1-to-1 risk reward ratio for every trade, and you let it actually hit the take profit or the stop loss, you're going to win $10, lose $10, win $10, lose $10. Maybe you'll win a couple in a row, lose a couple in a row, but you're roughly just going to break even because there's an equal probability of it hitting the take profit or stop loss. You add in commissions and swaps, maybe it's like a little bit worse, like maybe 49%, right? Because you have to pay the fees and stuff like that. But net on the outcomes, you're roughly going to break even. You start with a break even system if you do it this way. Then once you get some experience, you can kind of like wait for setups that you think are more likely to play out, and you can trade them. So that was the setup I was looking for earlier this week. Unfortunately, that did not set up. So now what I'm waiting for is I'm waiting for price to come into this support level, and I'm waiting for it to bounce right here. So what am I probably going to do? Well, it's as simple as it looks, right? The resistance here a couple times, price broke above, then has found support a couple times. I just think that if it comes back into the zone, it'll be worth a shot to buy. Maybe it'll have a little bit of a bounce. What would the trade look like? It's really hard to tell, but we can pre-plan certain things about the trade, like ideally, because we don't know exactly where the entry will be. Maybe it bounces a little bit and the entry's further up here. Maybe it goes really deep and the entry's all the way down here. I'm just going to say, let's say the entry's something like that. Stop loss below and a target of a 1-to-1. That's a pretty reasonable trade, right? Because if it bounces, it just has to get that far. The take profits filled. And if it does bounce, it could go all the way back up to that resistance zone before stopping, right? Because these are major daily zones and price kind of bounces around from zone to zone. So if that happens, it'll be an easy profit target. It's a reasonable stop loss, right? We're not going to get taken out if it does something like that and then it just pops back up and then it keeps going. This is only going to be a stop loss that gets hit if price actually legitimately breaks far below the zone. And that will be perfectly fine, right? You have to have some sort of risk structure. You can keep your account as the stop loss, and you can put a small deposit and you can just risk large portions of the account per trade, or you can risk the whole account per trade. Or you can, if you have a bigger account, like right now I'm trading with an account has $150,000 in it. If this account, blows, that would be very sad. That would really suck. So I'm using just a stop loss to manage the risk, right? You could do it however you want. You can use hedging, you can use dollar cost averaging, use a small deposit as the risk structure, or you could just use a stop loss. For these trades, I'm just using a stop loss. It's a pretty simple way to do it. And if you have a win rate that's above 50%, then that's all you really need. So AUD CAD, let's go to the next trade. This is a buy on Euro AUD. That's the potential. So this is the last trade. This is the last part. AUD CAD. So what has happened here? So price broke above this zone, came back into this support zone. Last week, I actually bought right here. I bought on this candle further up here. Price ended up going down. And I thought the price was actually going to break below this zone and continue because of the price action. So I actually ended up closing my buy and then I got short. That didn't work out. So the short ended up spiking up and it hit the stop loss within the next day. And the buy that I had would have hit the profit target. So not only did I not make $10,000 on this, but I actually lost $5,000 because that's how much I risked from this trade hitting the stop loss and spiking up last week. So that was a loser for me last week of like 5K. Fortunately, this week I've made like 22K, so it is what it is. But what ended up happening is I went to this resistance zone. I did not take this trade because this trade occurred way too quickly, and I did not have time to enter. I didn't see it like happening. Wasn't watching it at that time. I was doing something else. I don't know what the hell I was doing. But I don't even think I had an alert up there at that zone. But that ended up bouncing from there. Didn't take that. So now what do I think is going to happen? Well, it's very simple. If this is a support resistance zone here on the daily chart, and if price is in fact bouncing around in it like it's been doing this whole time, it's bouncing as resistance, it's breaking above, it's bouncing as support. Now it's broken below the zone, right? And I would consider it has broken well enough below the zone. You want to be careful because sometimes if price barely breaks the zone, then quickly comes back up above it, you get caught in fake outs and stuff. There's no way to avoid that 100% of the time, but I found a higher percentage of the time you can avoid these quote unquote fake out things or whatever. Some people call it market manipulation or all this crazy stuff. You can avoid that a lot of the time, in my opinion, in my experience, under the right circumstances, with enough context, if you wait for a far enough breakout past the zone. Now, what does quote unquote far enough look like? I don't know. It just depends on the context. I think you should just get experience seeing it over and over. All I'm saying is if you see price barely break past the zone and, barely breaks past the zone and it quickly comes back in, it might not be a trade you take the retest on. What does that mean? It just means if price barely breaks below the zone, then comes back, you might not want to be selling, trying to trade that as like a break and retest. I just think it's better to wait for like a very clear breakout, pretty clearly significantly far past the zone, and then a huge retracement back into the zone. Those just tend, from my experience, to work better. Stuff like this right here, right? You see price break really far below the zone, come all the way back. That one worked out nicely. This came all the way back up here, bounced for a second, but then had a closure into the zone, then broke above, right? And it wasn't just barely a tap above. It had a nice move above the zone, came all the way back. That's why I took this trade, and it's so foolishly exited early. But we're all gonna do things that are not, correct every single time. Everybody makes mistakes. This wasn't even a mistake, right? It's just I legitimately thought it was going to break below, so I closed it. But I did buy it because it came back into the zone, and I thought it would bounce there. And then, lo and behold, it ended up playing out. So this, I think price has broken out far enough past the zone. I think it's coming back up into here, and I think that this zone right here is going to cause price to find a little bit of resistance, which will then make it go down. You'll notice, again, I haven't entered the trade yet, right? Why do I not enter the trade whenever it's kind of outside the zone? It's generally because of the risk structure, right? So if you enter outside the zone, like say like, you're trading a break and retest of a support resistance zone, just like this, right? It's a sell. So price comes back into the zone and then it hits the zone, then it starts to bounce away. And then you enter after it's already bounced away when price is like below the zone. It's like not even still in the zone. What that does is, visually speaking here, let's just kind of like compare and contrast. You're entering here, your stop's above, your target's down there. This is what the trade looks like, right? So this is actually pretty good, right? Not too bad. You don't have to be a hero. Price doesn't really have to go that far for you to triumphantly hit your take profit. And the stop loss is still viable because, price would have to spike all the way into the zone, above the zone, and then further past the zone to hit the stop loss. That's not too bad. Look what happens, though, if you simply wait to enter at the zone. So let's say, I'm doing this entry like as if price came all the way up into the zone where my alert is currently at right here, right? So what does this look like if it gets there? Well, let's do the same stop loss, right? You're entering. Now, if you have a profit target at the same area, you've instantly doubled your risk reward ratio, right? But you don't even have to do that. And most of the time, I don't even do that, right? Because it's easier to get out of a 1-to-1 risk reward ratio trade much quicker. And you have your profit targets already booked. Look at that. If you just simply wait for price to come up into the zone and then get the better entry, sure, you're going to take fewer trades, yes. But those trades from a risk structure perspective, it tends to be so much less of a pain in the ass. And it also tends to work out a lot quicker. Because now instead of waiting for a 62 pip stop loss or target, this is only 40 pips, right? It's like significantly less, right? It's like a third less. So if price goes up here, you're going to quickly get stopped out. But all price has to do, right? If you wait for like a good entry, all price has to do is comes up there, you enter, it just has to tug away just a little bit, right? It doesn't even have to go back to the previous low for you to be out in profit. It just has to tug away for a moment, and then you're out in profit. That is why I like those kinds of trades. Trades like GBP CAD, where you enter, and then as long as your entry is like right there at the zone, I mean, like, look at the entry that I waited for, right? I waited like all week for this to occur. And then price got all the way up into the zone. I entered like right around where the highs of the zone are. And then it came down profit. If I wouldn't have done that, if I would have entered down there and the stop loss is way up here and the target has to be way down here, right? This trade would have happened to have hit the take profit this morning because GBP CAD's now had a big move, but it just would have taken longer, right? And it's not always going to play out this quick. The price could have easily just bounced here and then come back up to around break even and then played around for a week or two and then gone. And now you're in a trade for like 2 or 3 weeks, right? Which is perfectly fine. However, all I'm saying is that if you just simply wait for more optimal entries, which generally just means entering like at the support resistance zone, if you're a support resistance swing trader in the Forex market like me, then it just tends to present a much better risk structure. So that's what I'm waiting for in AUD CAD. I'm waiting for AUD CAD to come up into this zone, and then I'm going to try to sell whenever it gets in there, that zone. And then if it falls away, cool, I'll make a profit. And if it doesn't, if it goes up above, then I'll get stopped out and then take a loss. Now, am I 100% going to take these trades on AUD CAD and Euro AUD? No, they're just potential trades, right? We could have a news event come out, like, for example, non-farm payrolls this month, which is tomorrow, and it could spike up like quickly through the zone with a ton of momentum, and I get the alert, and then I'm watching it live, and I see, this is a crazy news event right now. There's a lot of volatility, there's a lot of like momentum. I'm not going to sell AUD CAD, right? The same thing for Euro AUD, but vice versa. It could be spiking down into the zone, gets there really quickly, and then I just get like a weird feeling. And I'm like, there's a lot of momentum right now. This is a news event, a lot of like fast movement here. Probably wouldn't be best to get in front of a truck that's flying at you down the highway. Probably better just kind of wait and stand off the sidelines. And then maybe if it starts to bounce, then I'll enter, like maybe 15, 30 minutes later. But things like that, right? Like crazy market spikes back and forth, you can avoid a lot of the volatility by just using alerts instead of like limit orders. That's why I just use market execution. So am I going to take these trades 100%? No. But, do I see them as pretty good opportunities? Yes, I do. As far as everything else, I don't really see opportunities on a lot else right now. There's a lot of people who do see a lot of opportunities on all the other trading pairs. But, just for me personally, I don't really see anything right now. I generally update all my analysis just once a week, usually on Sunday evenings. Just because that's when the market opens for me here in Texas. And then on Sunday evenings, it makes my job really easy because I just kind of click through all the pairs and I see if price is really close to like a major support resistance zone. And if we've got a couple pairs that are all correlated, say a bunch of JPY pairs like CAD JPY, AUD JPY, GBP JPY, all the JPY pairs, Then what I'll do is I'll select what I think is the best trading opportunity, right? What does that mean? It just means I look at all of them and I see which one do I personally think looks the best to me personally in my subjective opinion. And then I'll just look at that for the week, right? Then the rest of your trading week is really easy and really simple because it's mainly just like having your alert set and just waiting for price to get to the areas where you're either going to enter or where you're going to manage a trade, right? You could be in trades sitting and waiting and you have alert at the next support resistance zone. And you know, if it gets there, you might decide to take profit if it looks like it's going to start bouncing or something like that. You can make a lot of entry decisions, trade management decisions, and exit decisions by simply just doing, 15 minutes of work once on a Sunday evening at the beginning of the trading week, and the rest of your trading week is really easy as a swing trader. So whether you're scalping, which is perfectly fine. I think scalping works better in different markets. Like if you're trading like, for instance, like futures, or if you're trading like NASDAQ or US 30 or S&P or something like that. Works really well there because you have lower spreads, low commissions, a lot of movement. Scalping, I've done it over the years in Forex trading, but it seems to be more of a pain in the butt than swing trading, which is why I've always I've got into these little shticks where I go on scalping for a while, and then it works for a little bit, but it's kind of a lot of work, a lot of monitoring, a lot of this and that. And then I always tend to gravitate back to swing trading or just some form of that using 1 hour, 4 hour daily charts. So it is what it is. Swing trading tends to work better for me in Forex trading. I guess that's just been the case over the past 9 years I've been trading. Scalping may work better, in other markets that are kind of a little bit more liquid, a little bit more fluid, a little bit tighter spreads, lower commissions, things like that. But this is my analysis. Again, if you're not on my free Telegram channel, it's free. It's fun. I just post all my stuff in here. You can see I've shared these exact ones I've been showing you about Euro AUD. I've shared this in here this week. And I've shared AUD CAD. So Euro AUD and AUD CAD. So yeah, and here's the AUD CAD setup. So yeah, make sure you're in this Telegram channel. So the first link in the description of this video, I'll probably put in the pinned comment. A good week so far, $22,000. I'm trying to grow this account. I just funded a little bit more into the account. So the account has 150K in it now. And I'm going to be trying to grow it to, I don't know, maybe 200K, maybe withdraw a little bit, maybe grow it to 250K, like $250,000 or something, then withdraw. But yeah, you can follow all the updates and stuff in the Telegram channel, and I'll see you in the next video. So have a good one, my friends. Cheers.